what's up, guys? Long time no see. Wanted to check in, make sure everything was going well for you. Hopefully you're selling a lot, making a lot of money, and everything's going smoothly for you. Sometimes I know that it doesn't. With tax season just coming past us here, I wanted to do a video on taxes because I feel like there's a lot of value to be shared here on this, and I think a lot of people are more scared than they should be when it comes to this, and a lot of people probably understand it by now, but for some of you, you may not, and I wanted to kind of ease your mind now that the 2021 tax season is over. We can start focusing on our 2022 taxes and making sure we're prepared for doing those next year around this time. Now, the one big thing that changed is the new $600 tax rule, right? And, you know, a lot of people are like, oh, I can't believe they're going to tax $600. Are they going to tax only $600 transactions? How's that going to work? And there's a lot of confusion and a lot of misinformation out there on this. So it shouldn't really be the biggest deal in the world because you should already be claiming everything, but you might not be, and you might have just gotten into this and you're not really sure how to do certain things. I will say that the new $600 tax rule, it's going to be kind of a headache, probably mostly for the IRS and for individual sellers that do small amount of sales. I think there's just going to be a lot of computation errors and a lot of journal errors and stuff like that, and just tracking errors and whatnot, and filing errors as well that the IRS is going to have to deal with. But I'm sure they'll smooth all of that out for the extra money that they're going to be bringing in on this. Now, what does the new $600 tax rule mean to you? Well, it's just an adjustment of a rule that was already previously there. And so what's going to happen is, what's changed, really, the only thing that's changed is the threshold at which you will receive a 1099-K in the mail. And what is a 1099-K? A 1099-K is a form that the IRS basically sends you to say, hey, we know you made exactly this amount of money this year. And so when you get a 1099, you better claim at least the amount that it says on the 1099. That is the most important thing. Do not claim an amount lower than the amount that the 1099 says, because this is essentially the IRS sending you a thing in the mail to say, hey, we know you made this money, you better go ahead and claim it come tax time, because you're not going to get like a W-2 or whatever you would get from a normal employer. So it's on you to be honest and say how much you made. However, in the past, once you hit $20,000 in sales, you would get a 1099-K in the mail. And I would get one from every single platform that I sold at least $20,000 in sales on. So I got one from eBay, I got one from Amazon, you can get one from Mercari, you can get one from just about anybody that you go through and sell $20,000 or more worth of stuff in a single calendar year. And the only adjustment that the new rule is going to make is that instead of it being $20,000 where you get a 1099-K, now it's going to be $600. So if you do $600.01 in sales on eBay, and $600.01 in sales on Amazon, and $601 in sales on Mercari, you're going to get 3 different 1099-Ks for $601. And when you claim on your Schedule C, when you file your taxes, or when you go to a tax preparer, you better be giving them the 1099 for each of those and claiming $601 as income 3 separate times. So you'd be at what, $1,803, right? And you'd have a 1099-K there from the IRS for each of those platforms saying, hey, we know you made the $601. If it was $599, you wouldn't get the 1099-K in the mail, and it would still be on you to be honest, but the IRS doesn't really know about it at that point. They haven't been reported to, and you can kind of make that decision yourself. I think you should file. That's what I would do. Like, for instance, there's times where I don't hit $20,000 on Mercari or another platform, but I still add that to my income on my Schedule C because I want to claim it. I don't know if they'll audit and check my Mercari. They probably won't, but I just want to be honest and make sure I've claimed all of my sales. So that's the best thing you can do in regards to the IRS. Don't try to get around filing your taxes just because you didn't get a 1099. That's not the smartest thing in the world to do. But also, you can breathe a little easier knowing that this is just an adjustment of the level at which the IRS will send you the form in the mail to tell you they know how much you made. So, before it was $20,000 or I think 200 sales, you would get one, and now it's just going to be $600. So again, if you only do $600 or more in sales on eBay and you don't do that on Amazon or Mercari, you're only going to get one 1099 in the mail. And the 1099, again, is just the IRS reminding you that we know what you made. And so if you were smart, you're going to make sure you claim everything on that 1099. So that's the only thing that's going to happen here. It has nothing to do with like a $600 transaction. It has nothing to do with smaller transactions not being taxed. Like, all transactions are going to add up to a total, and at the end of the year, if that total is more than $600 for any platform, you're going to get a 1099 in the mail. Guess what? If you get more than $600 worth of like non-friends and family money coming into your PayPal, PayPal is going to send you a 1099. Now, here's the best part of this though. The 1099 is going to reflect your gross sales. So it's going to be the amount that Amazon, eBay, or Mercari, or whoever you're selling through took in sales. And that might seem unfair because you're like, why am I getting taxed on all of the income when really not all of that income hit my bank account? Well, you're not really, because once you start at the top with the Schedule C with that $601 that you made on eBay that year, now you get to take off all of the commission fees. So really, even though you're claiming 601, you're doing your due diligence. Now on the Schedule C in the section of expenses, you can take off eBay fees as commission fees. You can take off all of the shipping labels that you've purchased. You can take off all of your cost of goods sold or supply cost, depending on how you do that, because you don't have to keep inventory if you do under a certain amount of sales. And I believe it's something asinine like $26 million in a year. So either way, you're going to take those expenses off the $601. So what you're actually going to end up getting taxed on is going to be an amount much lower than $601, but at least you're telling the IRS, hey, this is what I made. I'm being honest about it. I'm also being honest that of that $601, 200 of it was cost of the goods that I purchased to actually sell. So now I'm only getting taxed on $401. I'm also going to be honest and say that 12% of that $600 was eBay fees. So I'm going to take 12% off of that, and whatever that comes out to, now that's what I'm getting taxed on. You're also going to say, well, it cost me $200 to ship that $600 worth of stuff. So now maybe you're down to, let's say they took $100 in fees off, you're down to $300, and now you're down to $100 in actual profit from your $600 in sales. So you can breathe easier. You're not going to get taxed on that big number. You're going to whittle it away with your expenses, and that's why it's probably a good time to tell you that you should keep track of all your expenses for the entire year, and I mean all of them. If you don't end up claiming the expense, that's fine, but at least you kept track of it so that if you did want to claim it, you're good to go. And I mean fuel, I mean cost of goods sold. Save all your receipts. I think I had 181 receipts to enter, and that's because I buy a lot of retail stuff to flip. Well, you can use a program called QuickBooks Self-Employed, and if you do the monthly, it actually comes with a free filing through TurboTax where you can just import all of those receipts. And the receipts you can actually just snap with your phone. You just hold it up to it, it takes a picture, it pulls all the info, the date, the store, the amount, and then you can categorize that expense as supplies or inventory or whatever you want to categorize it to make it make sense for your business. So just trying to be helpful here and explain to you how to be more organized for tax season next year. QuickBooks Self-Employed or some type of expense tracking system so that you can keep up with it on a monthly basis, on a weekly basis. The more you break that down, the more you're going to have control of your business and know how much you're actually making. But more importantly, at the end of the year for taxes, it's all going to be ready to go for you. You can then start taking those expenses off of the 1099s that you're going to receive. Because I'll tell you right now, if you're selling on eBay, you're probably going to hit over $600 in sales, and you may not be used to keeping track of your expenses because you may not be used to even having to claim that on your taxes. And this year is going to change. You're going to have to do it, and so I'm trying to help you be prepared and make sure that when you get those 1099s in the mail, because if you're doing well, hopefully you get multiple 1099s, or at least if you're only selling on eBay, I would hope you hit at least $600. So I'm trying to help you make sure you keep track of your expenses, and that way you're ready to go to whittle that, whatever that 1099 amount is, you're going to get taxed on that total amount. Well, the more expense you can take off of there, the less you're going to get taxed on. And so that's going to help you out. Maybe in your first year or two, you could even show a loss if you do things right. So hopefully this video was helpful to you in easing your mind on the new $600 tax rule and what it's going to mean for you, and then how you can kind of keep track of expenses and whittle that tax burden that you're going to have at the end of the year. $600 wouldn't be the end of the world, but if you get one for like $11,000, that's going to be a pretty high tax burden if you didn't keep track of any of your expenses. So if you want to see more videos like this, go ahead and subscribe to the page. I know I haven't been keeping up with them as well, but I'm going to try to interject some more videos in there and keep things moving for you. Always talking flip life, selling stuff on eBay, Amazon, Mercari. I like to talk sports cards. I like to do a little bit of that. Got the National coming up here in a few months. Can't wait for that. Always doing breaks. Always doing submissions, and I've got a couple submissions that are going to come back that I'll share with you. But again, if you're into any of that, go ahead and subscribe to the page, like the video, share the video, but in the meantime, keep on flipping.